Currency is an especially prominent topic at this year's G20 summit, largely because of the tension surrounding quantitative easing. Joining us now is Nick Bennenbroek, head of currency strategy at Wells Fargo Foreign Exchange and a Bloomberg best currency forecaster. Nick, welcome back to Bloomberg. Always good to have you on.
Good afternoon.
Is this much ado about nothing? Talk to us about all the background noise that we're hearing out of Seoul concerning various topics, the currency, quantitative easing, trade imbalances. First off, is anything going to get done, or is this just a glorified photo op?
Well, I think it's probably more the latter. It is a bit of a photo opportunity, and I think partly because of the quantitative easing, or at least some of the tensions that are surrounding the whole G20 meeting. The finance ministers and the central bankers met last month, and they made some progress in terms of talking about avoiding competitive devaluation and also trying to maintain these imbalances, current account deficits or surpluses at reasonable levels. But I think the fact that there does seem to be differences of opinions and critiques from different countries towards different countries is going to make it hard to achieve anything.
And one of the critiques in a Bloomberg story, we have the Director General at China's Ministry of Commerce aimed this one at the United States. He said, don't make other people take the medicine for your disease. Right. So this is at the very least getting a little bit personal, specifically between Washington and Beijing. Are both countries at fault here? A lot of people seem to think yes.
Well, I mean, I think in terms of the tensions, perhaps, both countries need to take some responsibility for some of the tensions that are occurring right now. And that really is due to their place in the world economy, the US being the largest and China being the second largest, for example. Because we have other countries out there like Brazil and even some of the Asian countries who are instituting capital controls, but they really don't have the same spillover effects. Now, you know, both of these countries are doing the best for their own personal circumstances, perhaps. I mean, with quantitative easing, trying to get the economy going again, trying to avoid deflation.
Why so much criticism about QE2 from the other countries? Is it because they feel like the rising tide is not going to lift all boats, that if things start to stabilize here in the United States, that doesn't necessarily mean it's going to happen in other nations' economies?
Well, again, I think it's probably a product of the imbalances that we saw build up over several years, for example, and you know, the sort of the very inflated, perhaps, housing market that we saw. And now we're going through this whole deleveraging process in terms of we're still dealing with high debt levels, we've still got difficult growth, and countries are facing challenging situations. So, you know, it's a challenging environment for everyone, and when you get policies that perhaps increase the challenges on some countries, it's going to be difficult to move forward.
Now, you were mentioning about last month's meeting, G20 central bankers and the finance ministers. At that meeting, they called for a move toward more market-determined exchange rates, and they did pledge at that meeting to refrain from competitive devaluation of currencies. What happened to the pledge?
Well,
it's only been a month.
Well, exactly, and I think what we saw last month, and I think what we're going to see this month, is a statement of good intent. More flexible exchange rates. Let's maintain these imbalances. But we're not seeing any action plans, for example. We're not seeing specific targets for what those current account deficits should be. The former Fed Chairman Alan Greenspan, for example, mentioned or suggested that maybe we shouldn't have excessive foreign exchange reserve accumulation. So I think we'll get a statement from the leaders of what are good policies and what are things that we should aim for or strive for, but won't necessarily get a concrete agreement as to how we're going to get there in terms of, you know, how are we going to get these economies more in balance? How are we going to get these currencies to adjust?
What is the Fed's announcement of another round of quantitative easing doing to the U.S. dollar?
Well, I mean, I certainly think it's probably, over the next few months, is going to perhaps act as, I think, a drag on the dollar. Right now, we're not really seeing too much weakness in the dollar. In fact, if anything, there's a focus a little bit right now on Europe and some of the difficulties that have resurfaced there. But overall, I don't believe we're going to see a repeat of the European debt difficulties that we saw May, June this year, for example. And the very easy Fed policy contrasting against some other countries, I still think the dollar's got a little bit further to fall.
How's the dollar going to affect emerging markets in the coming months?
Well, you know, I think emerging markets are still going to do pretty well. Even in countries which have quite significant concerns, countries like Brazil, for example, they've still got good growth in terms of retail sales and also manufacturing, around about 10% or so. So, you know, I think those currencies will be stronger. I don't think it's going to derail growth in those countries, though. And overall, I would expect there's good investment opportunities, both currency and otherwise, in some of those emerging markets.
Quantitative easing, are we seeing that it is increasing demand in other countries as well, other emerging markets?
demand for the currencies, or just in the economy?
No, just the currencies.
I think so. You know, certainly the very low interest rates and the very easy availability of dollars is definitely encouraging, particularly the emerging currencies and also the commodity-based currencies, Australia, New Zealand, Canada. These are all currencies that I think will do quite well.
Nick, what comes out of this conference? Because you've been on the sidelines at a lot of these things. It's people getting together ostensibly in a sense of goodwill to try to correct some imbalances, for lack of a better term. What comes out of these things?
Well, usually what comes out of these types of conferences is a sort of a to-do list. You know, projects to work on, studies to do, and let's talk about it again in the next 6 months or in the next 12 months, for example. So, you know, it's difficult at the best of times to get the leaders of 20 nations to come to an overall agreement, for example.
Yeah.
And with some of the tensions or some of the critiques that we're seeing going back and forth, for example, it's just going to make it no less easy, for example, to get all the countries to agree. And that's why I think we'll get a statement of good intent, but no action plan.
All right, Nick Bennenbroek, Wells Fargo. Always good to have you on. Thanks, Nick. Appreciate it.
Thank you.